Okay, I guess now I'm audible, guys. I guess now I'm audible. I'm really very sorry. There was some issue. Chalo, no worries. So, okay. Hello everyone. Warm welcome to Testbook Super Coaching. My name is Madhav Sir. I welcome you all in a very important session of a very important series, that is Basics of Finance. Finance is a very important topic for your RBI, SEBI and all other regulatory body exams. The reason is SEBI, RBI, or maybe SIDBI, or maybe IFSCA, IDBI, all those organizations which you talk about, they all are financial organizations. And if you are not clear with the basics of finance, it will be impossible for you to clear the regulatory body exams. So what I have done is I have started with a new series for you all. I have named that series Basics of Finance. I started with the first topic, that is I introduced the financial system with you. In the Indian financial system, I discussed with you financial institutes. Then I moved ahead. I talked about financial market. Then we discussed financial instruments. And in the end, I discussed financial services. That was the first topic from where we have started this series. Second topic was RBI. Rather than discussing the structure of RBI, the history of RBI, blah, 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 I directly hit the important area from where the question can be asked in your examination as well as in your interview, that is functions of RBI. And that too, in the functions of RBI, I've taken a very critical function of RBI, that is RBI is responsible for printing of currency. I have not discussed with you that RBI prints paper notes, government prints metal coins, RBI prints paper notes from rupee 1 till 10,000, but rupee 1 is printed by government. I have not talked about those areas which are easily available on the books or on the PDFs which you can go through on your own. My main agenda behind this series is to make the important concepts clear with you so that you can enjoy, you can feel the finance. So I discussed with you how RBI decide what amount of currencies need to be printed every year. Obviously, if in India we have X amount of currency which is in circulation, so next year or maybe next quarter RBI will be printing the currency, but the question is how much currencies need to be printed, how that decision is taken. I have discussed that in the function, that is printing of currency. Then I moved ahead. I discussed with you RBI is management or RBI is manager of forex reserves. Rather than talking about balance of payment, forex reserves can be maintained in the form of cash, in the form of securities, in the form of gold. Again, rather than talking or discussing the theoretical area, I clicked again a very important area, that is how exchange rate is decided. What is fixed exchange rate? What is pegged exchange rate? What is floating exchange rate? What is managed floating exchange rate? Which rate is being introduced or which rate is being implemented in India? All those things were discussed in that session. So this series is basically to make the concepts clear to you, not the theoretical part, because I know you all are aware of theory. Theory is available everywhere, but the concepts, the beautiful concepts, are unclear till date to many students. Now, some of you might be thinking, sir, these concepts, are they important with respect to the examination? Do you think anyone is going to ask a question from us in a descriptive form that how RBI print the currency? Obviously not. I'll give you an honest answer. No. Do you think that there will be a question where they will ask you how exchange rate is decided? No. So then why you are teaching us? Because if you are not aware of these beautiful concepts, which are easy, you won't be able to understand the working. Why RBI is not asking those questions to you? Because these concepts, they are in much depth. Rather than digging in that much depth, giving you the 100% clarity of the concept, I'm giving you more than a surface clarity so that you can involve yourself, you can indulge yourself in the better understanding of the financial terms. That is my agenda. Clear, guys? That is my agenda. Is it clear? Yes. This session is going to be live from Monday to Friday at 8 p.m. where I will be coming up with n number of financial important topics. Today I have a very important topic with you, that is monetary policy and fiscal policy. Now you must be worried that some monetary policy and fiscal policy are the policies used to control the inflation. Have you taught inflation? Yes, in my yesterday's session. If you haven't watched it, you can go check out the playlist. The playlist is available and you can check out the topic where I have discussed inflation. I have even discussed inflation versus deflation, why an economy prefers inflation over deflation, what is this controlled inflation, why the controlled inflation range is 2 to 6% in India, why not 20%, why not 1%? I have given those logical answers in my previous session. So today, in order to add more logic, more concept to our discussion, moving on to the today's session where we are going to discuss what? We are going to discuss monetary policy and fiscal policy. As I said, I have already discussed with you the inflation part. Even I have given you the theory along with the important concepts. Even we have discussed how inflation is calculated, WPI, CPI, everything was discussed in the previous sessions. Today, first, I'll discuss what is the effect of inflation, why we prefer controlled inflation over inflation or deflation. Remember that if someone asks you for an economy what we prefer inflation or deflation, what will be your answer? Honestly speaking, majority of you will say inflation, but that is wrong. Sir, we will not prefer inflation or deflation, rather we'll choose controlled inflation. And what is controlled inflation? I'm giving you an answer to this question. Only those students will be able to understand this answer which I'm going to give who have watched my previous session. If you have not watched it, do watch it after this session. So what is control inflation? So control inflation means average increase in price of goods and services should be in same ratio in which income of the country increases or national income increases or the overall income or the average income increases. If the average increase in price of goods and services is in same ratio in which the income increases, that is basically termed as control inflation, and the range of control inflation is obviously different for different countries depending upon their capacity to increase the income. Now I won't take much time because the candidates who have joined my previous session, they must be feeling that, sir, ये तो आपने बता दिया था, दोबारा क्यों बता रहे हैं? I'm just trying to relate those candidates who were not present in the previous session. Now jumping to today's topic, first I'll discuss the effects of inflation. The first point which I have for you all is in the effects of inflation. So whenever there is inflation, what does the inflation results in, or how we can define inflation, or how inflation impact our economy? Many things we will be discussing that. The first point I have for you is inflation effect is not distributed evenly in the economy. There are hidden costs for different goods and services in the economy. What does it mean? It means inflation effect is not distributed evenly. I'll take a very simple example. What I'm trying to say over here is, please listen to me very carefully. Let's say inflation in the economy is 10%. Let's say inflation in the economy is 10%, and simultaneously the average increase in income is also 10%. But if I'm saying average income increases by 10%, does it mean that everyone's income is increasing by 10%? No, sir. No, sir. Not at all. If not at all, that means many of the individuals out there in the economy, their income has not increased by 10%, but there is an inflation of 10%. They won't be enjoying this situation. So there is the I would say there is non-uniform distribution of income. Even if there is a control inflation, it may impact certain section of society. Got it? Moving on to the second point. Sudden or unpredictable inflation rates can harm overall economy, leading to market instability and thereby make it difficult for companies to plan budget for long term. What does it mean? See, I have told you in the previous session, one of the reason of inflation is whenever money supply increases, it results in increase in demand, And if demand increases, supply cannot increase simultaneously. We need some time to increase the supply. And if supply is not increasing, it will result in increase in price. And this increase in price results in inflation. So today, demand is increasing drastically, and the companies, the organizations, the corporate worlds, they need to plan their future. Do you think it will be easier for them to plan their future, to plan their budget in the high inflation rates? No, the entire balance sheet, or I would say the profit and loss statement of the company, is impacted due to this. Got it, guys? Next point. Inflation can act as a drag on productivity as companies are forced to mobilize resources away from products and services to handle the situation of profit and loss from inflation. It's quite obvious. For example, there is inflation. And if there is inflation, undoubtedly, raw material prices are increasing. And if raw material prices are increasing, in order to maintain same amount of profit, company will increase its selling price. But if the selling price is not acceptable by the market, then what will company do? Company will decrease the quality in order to maintain, or in order to sell the product at low selling price by maintaining the same profit. So it will affect the quality of product. It will impact the overall market. It will impact the overall mobilization of the resources. Then moderate inflation rate is, however, necessary, that we have already discussed, that inflation should be there, but that should be controlled inflation rate. Here they have used the word moderate inflation rate, one and the same thing. There are some more effects related to inflation, and what all effects I'm talking about. Please pay attention. Whenever we say there is inflation, please listen to me very carefully. Whenever I say there is inflation, can I say that inflation results in decrease in purchasing power of currency? Decrease in purchasing power of currency. Do you agree? Guys, do you agree? Do you agree to my point? Say yes or no. Guys, say yes or no. If I say inflation decreases purchasing power of the currency, do you agree with me? Do you all agree with me? Say yes or no in the comment section. Your active participation is much needed. Otherwise, it will be a waste of time for you as well as for me. Why I'm saying that purchasing power of money decreases, I'll try to explain this point. Please pay attention. Today, 10 grams of gold. 1 second. Today, 10 grams of gold, the price of 10 gram of gold is, let's say, I'm just taking an example, let's say 10,000 rupees. Let's say 10,000 rupees. Okay. Now I have 10,000, or let's say I have 20,000 in my pocket. So what I did, out of 20,000, I have purchased 10 grams of gold and kept it in my locker. And rest 10,000 rupees I have maintained in the form of cash. Rest 10,000 rupees I have maintained in the form of cash, thinking that today we'll purchase gold and in the near future again we can purchase gold, but not today. Let's maintain certain amount of cash. Now after 1 year, what happened? Sir, after 1 year we realized that the price of 10 grams of gold has increased to 11,000, and my cash with me is still 10,000. So earlier, with the help of this 10,000, I was in a position to purchase 10 grams of gold. Say yes or no. But over the period of time, the same 10,000 rupees is not capable to purchase 10 grams of gold because of inflation. The price of gold has increased and the purchasing power of rupees decreased. Earlier, my 10,000 rupees was capable to purchase 10 grams of gold, but now they need help of 1,000 rupees more so that 11,000 collectively can purchase 10 grams of gold, which means the purchasing power of 10,000 has decreased, and that is the reason they need what? So they need support of extra 1,000 rupees so that it can be purchased. So first point is, due to inflation, there is decrease in purchasing power of the currency. Secondly, I can even say that inflation has a negative impact on cash. Inflation has negative impact on cash. Say yes or no. And inflation has positive impact on asset. Inflation has positive impact on asset. Do you agree? Say yes or no. Good morning, everyone. Are you awake? Do reply. What I'm saying is, inflation has a negative impact on cash, but it has a positive impact on what? So it has a positive impact on asset. So if you are purchasing real estate, that means you're purchasing land, you're purchasing gold, you are purchasing silver, that will give you a positive return in case of inflation because their prices will increase in the near future. But if you're maintaining cash, its value will decrease. So inflation has a negative impact on cash and positive impact on inflation. Positive impact on asset. Got it. Moving to the next point. Please pay attention. This is very important. When we talk about inflation, I would like to link inflation to two things. One is deposit rate, because until and unless this link is not clear to you, this, I would say, connection is not clear to you, it will be impossible for you to understand monetary policy. So deposit rate and lending rate. I hope you understand the difference between the two. What is deposit rate? So deposit rate is the rate of interest which you are going to receive on deposit. First is, this is on deposit and you are going to receive it. And what is lending rate? So it is on loan which you are supposed to pay. On loan which you are supposed to pay. एक बार बता दो comment section में, is it clear? Are you with me? I hope you all are with me. You are understanding. Ritu, Manujendra, is it clear? I have come up with a very simple example and I am asking you a very simple question. That's a deposit rate means the rate of interest which you are going to receive on your deposit. Deposit rate means the rate of interest which you are going to receive on your deposit, and lending rate is the rate of interest which you are going to pay on loan. Clear? Clear? Which means if I'm talking about your savings account, the interest which you receive on saving account or maybe your fixed deposit, that is deposit rate, and the interest which you are going to pay on your car loan, that is known as lending rate. That is known as lending rate. Now stay tight. Please pay attention on the screen. You're going to get a very important information today which you haven't received in your life before this. Please pay attention. Try to understand and link each and every point. Please pay attention. Ready? Ready? See, if I say this, if money supply increases, what will happen? If money supply increases, it will result in increase in demand. It will result in increase in demand. Say yes or no. If demand increases with respect to supply, then it will result in increase in price of goods and services. And if price of goods and services are increasing, that results in what? So that results in inflation. That results in what? So that results in inflation. Now, please pay attention. If money supply is increasing in the market, that means everyone out there in the market possess funds. Everyone out there in the market possess funds. You, me, everyone having funds in our pocket. So if money supply in the market is high, can I say that? I'm writing a star and then writing this term. Everyone hold funds. Everyone hold funds. Obviously, that's not true. because everyone cannot be a correct answer, but there will be a good flow of funds in the market. So I've taken a hypothetical case that everyone hold funds. If the funds in your pocket increases, if you don't want to link in this manner, let's take it in the another manner. Let's not confuse. If demand increases, let's come back to this point. If demand increases, what will happen? So due to increase in demand, what will happen? So production increases, and due to increase in production, GDP increases. Due to increase in production, sir, employment opportunity increases. Along with employment opportunity, sir, income increases. Along with income, sir, profit increases. I hope you are aligned till this point. I hope you all are aligned till this point. Profit increases. Done. Now, if your income is increasing, your profit is increasing, can I say that simple economic rule, it says that savings will increase? Simple economic rule says that if your income increases, obviously your savings will increase. Now you must be wondering, sir, there is inflation. In case of inflation, how can you say that our savings increases? I'll give you an answer. Please pay attention. I'm giving you an answer over here. I'll move on to the separate slide. Please pay attention over here. I'll change the color. Please pay attention. If I say your income is 10,000, okay, and your income increases by 10%, that means 11,000 is going to be your what? It's going to be your new income. Out of 10,000, 80% is your expenditure. 80% is your expenditure and 20% is your saving. Obviously, due to inflation, your expenditure will increase. Obviously, due to inflation, your expenditure will increase. And today, the same 80% of new income is 8,800. So earlier you were spending 8,000. Now you are spending 8,800. Undoubtedly, earlier your saving was 2,000, but now your saving has increased to 2,200. I have even considered the impact of inflation in my discussion. Earlier, your expenditure was 8,000. Now your expenditure has increased to 8,800 on the same goods, on the same services, keeping in mind that your consumption has not changed. Only and only what has changed? Your expenditure because of the inflation. So I've taken the inflation impact as well. That is the reason, hypothetically, so I'll not say, but up to a certain extent, not 100%, up to a certain extent, in general, I can conclude your savings will increase. Now, if your savings are increasing, what you are going to do with your savings? Sir, you will be investing in gold, you may invest in real estate, or you may deposit your funds with the bank. So if your savings are increasing, that means deposits with banks, increases. Deposit with banks increases. Say yes or no. Deposit with banks increases. Say yes or no. Now, if deposit with bank is increasing, undoubtedly due to increase in deposit, bank's lending capacity will increase. Due to increase in deposit, bank's lending capacity will increase. Bank's lending capacity मतलब बैंक के लोन देने की जो कैपेसिटी है वो क्या होगी? सर इंक्रीज हो जाएगी. बैंक के लोन देने की जो कैपेसिटी है वो क्या होगी? इंक्रीज हो जाएगी. Agree to me? Bank's lending capacity will increase. Now, on the other side, if income is increasing, profit is increasing, saving is increasing, can I say that demand of loan in the market is low? Demand of loan is low. Why I'm saying that demand of loan is low? Because our income has increased. Why I'm saying that demand of loan is low? Because the answer is very clear to that. Because if the deposit with the bank is increasing, bank's lending capacity is increasing, but on the other side, what happened? Sir, on the other side, what happened on the other side? Sir, on the other side, everyone is having adequate funds in their pocket. And if they have adequate funds in their pocket, then their demand for loan will decrease. If the demand for loan is low, but supply of loan is high, try to understand. Demand of loan is low, but supply is high. So whenever demand is low and supply is high, what will be the result? So the result is prices will fall down. So therefore lending rates decreases. Say yes or no. Therefore lending rates decreases. Say yes or no. Say yes or no. Now, if I am a bank and I am working on simple operation, that is, I am accepting the deposit and against the deposit I am providing the loan. If lending rates will decrease, undoubtedly, in order to maintain same profit, I will decrease my deposit rates. So deposit rates decreases. Deposit rate decreases. Say yes or no. Deposit rate decreases. Say yes or no. Clear, guys? Is it clear? Is it clear? Say yes or no. Is it clear to you, Nitin? Is it clear to you, Nitin? If that is the case, please pay attention. Can I say that? Now this is clear to you, no? I'm removing this. Now this is clear to you, I'm removing this. Can I say due to inflation, deposit rate decreases? Due to inflation, lending rate decreases? Say yes or no. Say yes or no. Now, if deposit rate decreases, lending rate decreases, that means if you are a creditor, or you are a depositor, if you are depositing the funds or you are giving loan, then in that particular case, depositor will be at loss. And on the other side, if you are a debtor, that means you are a borrower. Then you will be at profit. Because you are borrowing at a low rate, that is beneficial for you. And the one who is depositing at a low rate is at loss. So depositor will be at loss, but borrower will be at profit. So inflation has a positive impact on borrower and negative impact on depositor. Is it clear? Is it clear? Is it clear? Chalo. Here comes the bonanza now. Now the bonanza is, whenever we talk about inflation, in order to control inflation, we have two important policies. The first one, we have monetary policy, and monetary policy is framed by RBI. Monetary policy is framed by RBI. I'll talk about fiscal policy later on. I'm just giving you the crux of the story. So monetary policy is framed by RBI, and in order to control inflation, what will RBI do? Sir, RBI will do following things. First one, control the money supply. Control the money supply so that RBI can control the demand, RBI can control the inflation rates. Secondly, RBI can control, because RBI is the regulator of banking sector, so RBI will control the lending rates. If RBI is controlling the lending rates, then also RBI can control the inflation rates, because when there is inflation, lending rate decreases. But if RBI tries to increase the same lending rates, inflation rates will start falling down. So RBI can control the inflation rates not only by changing the money supply, but also by changing the lending rates or by controlling the flow of credit. Credit comes from bank, loan comes from bank. So RBI can control the flow of credit, so that flow of credit will impact the money supply, and lending rates will help us to control the borrowing capacity of the borrowers. And if undoubtedly, if there is high lending rate, there is low credit flow in the market, money supply in the market will decrease and inflation rates can be controlled. Now, if you want to understand what is monetary policy, what is fiscal policy, then I would request you join with me today at 9 p.m. on Testbook application. We call it as a free masterclass. I have a masterclass at 9 p.m. in which I will be discussing in detail about monetary policy and then fiscal policy, and then the difference between monetary policy and fiscal policy. But I hope the understanding which I have given you in this session was first time in your lifetime where you have linked inflation to so many things. Before I conclude, if you are preparing for RBI Grade B and you aim to clear 2025 RBI Grade B examination, we have a batch for you, that is Lakshya batch. You can enroll in this batch right now in order to assure your selection for the upcoming year. And remember that we are running with a sale where we are giving you discount, and you can enjoy this batch just at 11,519, that is less than 12,000 or practically less than 1,000 a month, which you can obviously spend if you want to earn more than lakh a month. तो 1 लाख रुपए एक महीने कमाने के लिए 1,000 रुपए एक महीना खर्च करना, मुझे लगता है कि it's a good ROI, it's a investment with good rate or return on investment. So do use this code Madhav MADHAV in order to enjoy this course at the lowest minimum price. What you need to do is, I can help you with that as well. You need to go to your Google Chrome. The moment you go over here, you just need to type testbook.com. The moment you will type testbook.com, this page will appear. From here you choose super coaching. The moment you click on super coaching, drag it down. After coming to the different categories, there you will find a category named regulatory bodies. Here we have regulatory body exams. Click on this regulatory body exams. Here you will find the batch, that is RBI Grade B 2025 Lakshya batch. Click on this particular batch. You can enroll by clicking on enroll now. This batch is available at 13,439, but the moment you will use the code Madhav, MADHAV, the moment you use that code, this course will be available for you at the lowest minimum price. Got it, guys? So that will be all. We'll catch you soon in the upcoming sessions to go. Good luck. See you today at 9 p.m. where we will be discussing in much detail concepts related to monetary policy and fiscal policy. I hope you enjoyed the session. Don't forget to hit the like button before leaving, and do share the link of this session with your friends. Catch you soon. Bye bye. Good luck. God bless you all.